Hello guys and welcome back to another video. In today's discussion, we're diving into a crucial topic: short selling manipulation, breaking it down in a fresh way. We'll explore why it's happening, my perspective on the situation, and the latest leaks and rumors surfacing in China. This video is packed with intriguing details. Now, shifting gears to a crucial topic: NIO stock manipulation. If you've been holding Xiaomi stock over the past year, you've seen incredible gains. Over the last 12 months, Xiaomi stock has surged from 12 HKD per share to 44 HKD, nearly a fourfold increase. Similarly, BYD stock climbed from 22 HKD to 42 HKD, while Leapmotor saw a jump from around 20 HKD to over 33 HKD, marking a 50% gain. Investors in these companies have seen substantial returns, but the same can't be said for NIO stock. In contrast, NIO stock was valued at $5.33 per share in February last year, and now, in early pre-market trading, it sits at just $4.11. Instead of seeing growth, it has declined. This begs the question why. If Xiaomi's deliveries have increased and NIO's deliveries have also set records, especially in December, why is NIO's stock still struggling? The answer lies in short selling manipulation. Looking at the stocks that have gained value, Xiaomi, Leapmotor, and BYD, there is a striking commonality among them. None of these stocks are listed on US exchanges. Xiaomi and Leapmotor are listed in Hong Kong, while BYD is on the OTC market, which means these stocks are not easily shorted. Unlike US-listed stocks, where short selling is widely accessible, Hong Kong-listed stocks are generally difficult to short. Similarly, BYD's OTC listing in the US makes it non-marginable, meaning short sellers can't easily manipulate its price. NIO, however, is listed in the US, making it vulnerable to aggressive short selling. Short sellers deliberately push down the stock price through artificial selling pressure. The massive float of NIO shares further enables this manipulation, as short sellers can easily borrow shares, sell them, and drive the stock price lower. Although NIO is also listed on the Hong Kong and Singapore stock exchanges, these listings ultimately follow the movement of its US counterpart. If NIO's stock declines in the US, its Hong Kong shares will reflect the same trend, reinforcing the downward pressure. Another factor at play is the geopolitical tension between the US and China. Former President Trump took a strong stance against China, imposing tariffs and promoting economic restrictions. The Biden administration has followed suit, implementing 100% tariffs on Chinese EVs and additional trade barriers. The US government's hostile stance toward China has made Chinese stocks easy targets for short sellers, who take advantage of the negative sentiment to drive stock prices down. Interestingly, Alibaba co-founder Jack Ma once expressed regret about listing his company in the US, citing the excessive demands from American shareholders and the prevalence of short selling. Similarly, sources close to NIO's CEO have indicated that he also regrets the company's US listing. Some well-connected NIO owners who personally know the CEO and can reach him directly have shared insights suggesting that he is frustrated with the stock's manipulation by short sellers. The significant selling pressure on NIO stock is primarily driven by these short sellers, and the only way to counter it is through a major turnaround. While short sellers are currently pushing the stock price lower, they will eventually become forced buyers when the company's performance improves. Historically, NIO has experienced a massive rally, climbing from $1 per share to $60, partly due to a prolonged short squeeze. As the stock price rose, short sellers who bet against it were forced to cover their positions by buying shares, creating a cycle that further fueled the rally. Despite the challenges, a short squeeze scenario remains possible in the future. If NIO achieves profitability, which is expected in 2026, short sellers who have driven the price down to $4 per share will find themselves in a tough spot. Once the stock begins its climb, whether it hits $8, $10, $12, or even higher, short sellers will be forced to buy back shares to exit their positions. This could trigger a chain reaction, leading to a significant upward movement in NIO's stock price. So, while short selling is a frustrating reality, it won't last forever. Eventually, the short sellers will have to pay the price for their manipulation. We just need to be patient and wait for the inevitable turnaround. When that happens, NIO stock could soar once again, possibly reaching new all-time highs. The short sellers who bet against NIO today will ultimately face the consequences when they are forced to cover their positions at much higher prices. Hang in there, everyone. Better days are coming, and when the tide turns, it's the short sellers who will feel the squeeze. Let's stay patient and keep an eye on how this unfolds. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.